Good morning, and great to be here. And what I will do in the next, say, 20 minutes, I promise you 3 key takeaways. Okay, takeaway number 1, I will pick up based on what Prem said. It's a big opportunity. Why do we believe that SIF is going to be one of the biggest opportunities in the next 3 years? That will be 1. And 2, how does that big opportunity translate into a 5 lakh crore AUM for the industry is going to be number 2. Number 3, within this 5 lakh crore AUM opportunity, what are the insights that we have seen in the actual data in the last 6 months so that all of us in this room can benefit and be part of the 5 lakh crore in the next 3 years? These are going to be the key takeaways that you can expect from this session. I think Prem touched upon this topic, and I'm sure every speaker today is going to talk about it, about the 2 choices the investors have today. On one side, mutual funds, which are very accessible, very regulated, very transparent. You can enter with 500 rupees also, but they're very index hugging, okay, with multiple stocks, sometimes with 70 stocks within a fund. Okay, and as a result, the ability to offer differentiated returns is minimal. And what about the other side? AFPMS. Very flexible, very good strategies, very tactical, can offer differentiated returns. But to enter into this, you need a 50 lakh and a 1 crore minimum kind of an investment. So what lies in the middle? A no man's land. And this is where SIFs come in and fit into that no man's land, offering like what the Prem used the word bridge between MF and AFPMS. SIFs are the bridge, okay, bringing in the accessibility, the regulatory part, the transparency, the familiarity of mutual funds, and the sophistication of AIF. See, if you are talking about scale, I spoke about a number of 5 lakh crores, and if the industry has to scale to that level, with just sophistication, we cannot manage. It has to be a combination of sophistication plus familiarity, the comfort of mutual funds. I know this place, I know this environment, I know how it works, I know the daily NAV part. I know how the regulator comes in. Okay, I know that I can do SIP, STP, SWP, and all of this. The comfort and familiarity plus sophistication is what is going to build the scale of SIF in the industry to the number that I spoke about. And we did a very deep research in CAMS before SIFs got launched. It was last year, to understand what is going to be the market opportunity of SIFs. So where did this 5 lakh crore number come from? It came from 2 parts. One is the outside inflow of what we believe can be a 1.5 lakh crore opportunity. When I'm saying outside in, this is the non-MF AF PMS space, sans MF AF PMS. This is investors currently in direct equity, currently in margin trading, currently in FNO, currently in real estate, and all the millennials, okay, who have not invested in MF and AF and PMS till now. We believe those guys looking for sophistication and the thrill, okay, of derivatives and sophisticated strategies, etc., they will definitely come into this. I will tell you the reason subsequently when we talk. And on the right side is MF, AF, PMS. I don't know how many of you in this room know that there are 5 lakh investors in MF who have investments of more than 50 lakh in a single fund house. More than 50 lakh in a single fund house. And I'll make it more interesting. There are 10 lakh investors in MF who have invested more than 10 lakh in lump sums in the past 3 years. They put 10 lakh checks on the table, 10 lakh plus checks on the table, 10 lakh people available in MF. 3, there are 25 lakh investors in mutual funds who have more than 10 lakh, okay, in MF investments. So look at these numbers, okay. There are investors who exist and who believe in this MF, AF, PMS and have done the investments. And also CAT3, the AF CAT3 investors. We believe that the right side from MF, AF, PMS, without cannibalizing, okay, a wallet expansion, there is an opportunity of 3.5 lakh crore. And this can add up to the 5 lakh number that I spoke about in the next 3 years. So what's special? Okay, what's new? On the left side, okay, you see traditional mutual funds. Traditional mutual funds are like cars which can only move forward. Okay, and if there is a very difficult, volatile environment, what does a fund manager do? The fund manager holds positions, hold cash, goes slow, okay, and cannot move forward. Okay, gets stuck. Okay, and in a volatile environment, life gets difficult. So in your investor conversations, you can use these examples. I'll give you some examples like this. A car which is only having a forward gear. How about SIF? SIF is like a typical car which has got a forward gear, a reverse gear through shorting, okay, and brakes through derivatives. So this is a very, very sophisticated investment vehicle which can do a combination of long, which can do a short, and also derivatives to reach where we want, okay, in the right place, even if there is bad traffic, and even if there is a volatile environment. And we have seen the numbers. We have seen the numbers of how these are performed in the last 6 months in terms of returns. Okay, not bad at all. Okay, 2.5, 3.5% kind of returns have happened in the last 6 months, which is good for the industry, showing how this sophisticated investment vehicle is already working. Tax efficiency. When I started my career with Unilever, okay, I learned very early that sales is vanity, profit is sanity, but finally, cash is reality. Okay, returns. You need to deliver returns, of course. Very important to get returns, but it should be post-tax returns. What happens in the AFPMS world? It's like a leaky pipe. Okay, every time there is a churn in the portfolio, okay, in PMS, it is in the hands of the investor. Okay, the investor has to pay the capital gains and tax associated with the portfolio churn. What happens in AAF, fund level taxation? So it leaks. You have the money leaking at every point as a result of this inefficient taxation there. Look at the right side. Mutual fund, tax shield. SIFs have mutual fund-like taxation. LTCG equity, 12.5%. Okay, and short term, 20%. What else we need? Okay, the typical, and also tax only at the time of redemption. Okay, you don't have tax leaking in the middle, okay, of every churn, etc. So very, very, very tax efficient. Have these conversations with your investors. I've got one more interesting slide. I call it the market neutral strategy. The word market neutral looks very complex, but it's fairly simple. It's applying the sectoral intelligence or the stock intelligence at appropriate points. For example, if you believe, okay, that at this point, banking is doing well, IT is not doing well, I'll go long as an SIF fund manager, I'll go long on banking and short on IT. Within the sector, okay, within automobiles, okay, if I believe that Tata Motors is doing well, Maruti maybe not, then I will go long on Tata Motors and short on Maruti. So, irrespective of the market going up, down, I will make use of the volatility and the sector and the stock intelligence to appropriately apply the long and short positions. And what I will do as a result, I will isolate the alpha and I will reduce the beta. Okay, this is how the market neutrality of SIF works. Let's peel the layers. Let us look at a typical, I'm not naming the fund, I took one hybrid long-short fund for us to understand how is the fund built, okay? How is a strong foundation with a 60 to 70% coming in through fixed income and arbitrage, core stable foundation, and 10% on low-risk derivatives. Top it up with derivatives to strengthen it and to give a nice flavor to it, 10% on derivatives. And 10 more % on tactical, okay, tactical IPOs and tactical special situation products, etc. Top it up. So what do you get as a result? You get a layered portfolio engineering. What does it mean in terms of money? You get a return which is better than arbitrage. Okay, and I would not promise saying that the returns will be better than equity. It will be between arbitrage and equity. That's how the returns will be. But the risk, based on whatever we saw, all the car examples and seesaw, etc., that we saw, the risk will be 1/3 that of equity. Okay, is what we are seeing by analyzing the anatomy of these funds. SEBI Shield. Okay, so what more do we want? Okay, where there is this regulator who has ensured that all the mutual fund rules apply, okay, to SIF also. Very well regulated. Having said that, there are unique SIF specifics from an investor protection standpoint to ensure that SIFs have a different brand name, a different logo, a different website or a web page. Statement of account should say that I am from this SIF brand under this mutual fund, okay, and it should be different from an investor-facing standpoint. Because investors need to know that while the risk has been safeguarded, okay, the downside protections are in place, still there are derivatives. Okay, still there is all this, say, risky parts of this. So from an investor protection standpoint, the SEBI cage, the SEBI guardrails in place. So this is about the product. Okay, the product in terms of its features to deliver in the middle of all this volatility, which we have seen. About the product, which is tax efficient. About the product, which is very sophisticated. And the product, which is completely taken care from a regulatory standpoint too. So that's about the product. Now, let's talk about the insights that I was mentioning. Who has bought and who has sold in the last 6 months? Interesting slide. There are 9 AMCs, okay, which have gone live from 1st October 2025 to 31st March 2025. Okay, I'll give you one more interesting input so that you can sit up and listen to this for the next 10 minutes. You would not have seen this data anywhere else. The data not on this slide, on the subsequent slides, you would not have seen this data, but these data points will be very useful for your investor conversations. Okay, so data point number 1. 80% of the AUM has come from 3 AMCs, only 3 AMCs, okay, 3 out of the 9. Now, what does it mean from a distributor standpoint? Okay, it is a new category which is getting formed and nothing wrong in 80% being in the top 3. This is the first phase of a category formation. And we all know that for any new category, the investors or any buyers will go to places where the brands they are well aware, and they know the distributors, they know the manufacturers, okay, and they are comfortable with the name and the environment. Obvious reasons, 80% have gone to that brand or the set of brands to begin with as a first phase of category formation. One more takeaway in this for the distributors, okay, as you prepare yourself for the SIF conversations, credibility, okay, is the first currency. You need to build the credibility for what you are saying, okay, by being on top of the product yourself, educating yourself, getting awareness on the strategy and the product, what does volatility mean, what is underlying in the product, and all the examples that I gave, I spoke about, etc. Being able to talk with conviction to your investors and having that credibility in place. That's the first currency. That's what these 3 AMCs have demonstrated. Credibility is what they have demonstrated and accumulated 80% of the AUM. 10 more AMCs are launching SIFs, 10 more. And out of this, some 2-3 have launched now and coming up. So, wider product choices, okay, available for the investors and available for all of us. So, what does a wider product choice mean? It's not good enough to say that, hey, I'm selling SIF, I'm going to sell this SIF, etc. You should be able to talk about what I just mentioned a few minutes before on what exactly the strategy does and where does it fit in our client portfolio and why is it suitable for you, Mr. Miss Client, and why it is suitable for you. We should be able to have those educated, thoughtful conversations with our investors amidst this wide variety of products which are going to be available and the multiple choices which are going to be available. That's very important from a distributor standpoint. What I will do now is, I'm going to peel it a little, okay, and go to the next steps in the next 3-4 slides on who bought, who sold. The investor patterns analysis. Before I get to the investor patterns, I am from CAMS, so I have the data for 6 AMCs serviced by CAMS. 6 out of the 9 SIF launches are with CAMS service funds. And the AUM which got accumulated is more than 6,000 crore in 6 months. With nearly 30,000 investors having invested in SIFs and 30,000 plus folios. More important is this slide. Why do I like this slide? Because it is not just money which has come in, okay, in the form of AUM of 6,000 crores, like what Prem was mentioning to the industry of 10,000 crores. Not just the money. It is about the investors who have also grown. 30,000 investors have participated in SIF in the last 6 months. It's also about the distributors who have registered. 6,000 plus distributors have registered. Okay, these are great examples of a healthy category formation. Okay, where the ecosystem which is getting formed is a combination of all the players who have to come in. Okay, the investors have to come in, the distributors have to come in, and the money has to come in. All three have come very, very nicely, and SIFs as a result have moved from launch stage to an adoption stage now. Okay, the product has gone to the adoption stage with the wide runway which has been built by these 30,000 investors. Having said that, when we launched SIFs, there was a question, my God, 10 lakh ticket size, how many will be able to afford, how many will be able to invest, etc. But when we realize that after SIFs have gone live, the average ticket size that we are seeing is 21 lakhs. 21 lakhs. Okay, and there is one data point that top 100 investors have invested 25% of the money which has come in. No problem. 100 investors, especially institutional, and some ultra HNIs have invested. Okay, keep the data point apart. Look at this data point that there are close to 19,000 investors who have invested 10 lakh equivalent money. And they are the guys who have built the runway for us to move forward on the SIF journey. Having said that, this took me by surprise. When I looked at the data for the last 6 months on the investor demographics, who has invested, more than 30% of the investors are above 60 years of age. More than 30%. And 50% of the investors are between 40 to 60. I was not much surprised by that because that's a peak accumulation phase. But the number of investors who are less than 30 is maybe 7,000, 8,000 in number. So what we need to do is we need to have as distributors two different sets of conversations or types of conversations. One type of conversation on wealth preservation, tax efficiency for the more mature investors. And another type of conversation on sophisticated, intelligent assets and investments for the millennials and the other set of investors. So you should have these two packs ready with you, okay, when you are having these conversations on the strengths of SIF on A and B that I just spoke about. Data point, individual versus non-individuals. Okay, individuals close to 27,000, non-individuals 2,000. And no points for guessing that obviously the non-individual part in terms of the average AUM will be much, much, much higher. It's around 1 crore, okay, for non-individuals. And within non-individuals, who has brought in the money? Companies, okay, got the first rank, 1,167 crores. And one point which was interesting for me was that trusts who have invested in SIF had the highest average ticket size, 2.35 crores. So if you have friends in companies, HUFs, partnerships, and trusts, please go and talk to them. Okay, I think it's time to have your SIF advisory conversations with all these players now who are already investing and investing very heavily. Second point which took me by surprise, okay, you would not have guessed it at all, okay, is the number of investors in B30 in SIF is more than the number of investors in T30. Did anyone in this room guess it before SIF was launched? No chance. We always thought that it will be the tier 1 which will take off and fly. And we're thinking, who's going to buy in the hinterlands? Who's going to buy it in Ranchi or Gaya or Bareilly or Jodhpur, okay, or Vadodara, etc.? We didn't expect. But the reality is different. Not just the number of investors. The money which came in, 33% of the AUM is from B30 cities. And in the MF world, it is 19%. So in SIF, 33% of the AUM coming in from B30 is more than the percentage of money coming in from B30 in the MF world. Okay, so if you are from any of the B30 cities, distributors, okay, I'm sure this will be music, okay, and please go behind. You do have potential investors to have the conversations with. And where did the money come from? Okay, the top cities, no guesses on Mumbai or Pune or Delhi, okay, etc. Money has come from. But the emerging frontiers, like what I spoke about, Vadodara, Jaipur, Panchkula, okay, where money has come in from. But if you are from Lucknow or Indore or Kochi, please note that MFs have fared very well there. SIFs are still untapped. It's a great opportunity for you. Still untapped. Okay, Lucknow, Indore, and Kochi. But these are the cities. If you have not taken a picture of this slide, you can take a picture of this slide. Because this slide talks about within each city, who are the types of investors who are investing. Okay, I went into a deep analytics on who are these guys who are bringing money into SIF. I saw that in Mumbai or Ahmedabad, okay, or these places, or Delhi, etc. The ultra HNI base and the people in financial services had invested. And I saw a lot of tech guys from Bangalore, Pune, Chennai, Hyderabad, etc., were the tech guys who had invested. I also saw real estate people, okay, who are investing. And I saw this in, say, Chennai, Vadodara. Again, I saw some real estate guys, also in Jaipur. So you see the kind of investors who are coming in, like what I was mentioning at the beginning. Okay, so like what I was mentioning at the beginning, I don't know whether it was an applause or, yeah. So for the money coming, different types of audience, etc., which is always good news for the industry. Okay, and I was mentioning at the beginning that there are guys from direct equities, F&O, margin trading, real estate. All of this is turning out to be a reality, whatever we had projected. One more slide, data point, for US distributor to know that 95% of the investments have happened only in single AMCs. So if you are able to reach out to these customers, okay, and understand, say, who they are and what is the potential to invest in other places, great opportunity. You will love this slide. 70% of the investments have come through regular route. When I'm saying investments, both in terms of AUM and in terms of investor count, okay, it is through regular channel, which means SIFs, okay, are going to be strongly advisor-led. This is going to be very key for the growth of the category. So this is very good for all of us in this room, and we need to be ready and prepared in line with what we spoke sometime before. I personally like this data. These are the guys, 1,500 people who have not invested in any MF, any AIF, any PMS till now. Completely new to the industry. Okay, completely new to the industry. Fresh money, fresh investments, fresh energy coming into this space, okay, from these first-time investors. And I also saw that 100 out of these guys are possibly those F&O traders from the past. Okay, they had this, say, exchange-related investment, and they have not done anything before. So 1,500 people, good for us, which means, say, people in this room, don't assume that it's only the MF, AIF, PMS guys whom you should talk to. Please look at a variety of audience to speak to. What does variety of audience mean? Who are the typical investors who can possibly come in? Speak to direct equities. People who are now currently investing in direct equities, thinking they are some Warren Buffets, okay, till on one bad day, one big bet wipes out everything. Okay, so find out these guys and speak to them. And number two, F&O traders. Anyway, 94% have lost money. We all know that. Okay, all these guys who do the punting, okay, and thinking they get the kick and thrill and joy and happiness, but the money is going away the other side. Find these guys, speak to them. Already some 100 have come in, like what you saw. Real estate investors. Okay, they are big fans of real estate. Okay, but even though they are big fans, even though the industry is coming up well, shaping up well, there are these illiquid nature of the real estate, which prevents many of them in investing more. Talk to them about the REIT InvIT options in SIF, which can help them come to you. 4 is the millennials. We spoke enough about millennials and the under 30 cohorts who want sophistication, who want new investments, EV, pharma, health, okay, drones, those kind of investments. All of this you can showcase in the SIF world. And please, don't go to these 4 or 5 people. Okay, number 1, don't go to people who have somehow accumulated 10 lakhs and kept it for emergency funds. Don't go to them and say that, oh, well protected, well regulated, less volatility, you will get return. Please give me the 10 lakhs. Please don't do that. Emergency funds, we should not touch. And second, investors who are scared of volatility, okay, don't go near them. No point. Okay, if someone is scared of volatility, even though it is guarded, protected, okay, less volatile, downside protection, seesaw, lesser pipe, all of that is fine. But it is volatile. Markets are volatile. The risk is a little bit there too. So don't go to investors who cannot take volatility. Number 3, don't go to investors who have not seen one cycle. Okay, please don't go to those investors. They may not be prepared for this conversation. Also, tell investors that this is going to be a 5-year journey. Okay, this is not going to be, say, a quick, whatever, multi-bagger returns, etc. in 6 months, 1 year, etc. Please do not do that. Having said that, I have only 1 or 2 slides more. Okay, and these 2 slides talk about, okay, you are there, you are ready to have the conversation, you are ready to launch. So what should you do? Number 1, like what I was mentioning, I think I would have mentioned some 2-3 times till now. Number 1, please educate yourself about the strategy, about the product, okay, about the features, about the AMC, etc. Educate yourself. That is number 1. Number 2, start small. Okay, don't ask for the entire portfolio, etc. Start with 5%, 20% of the investor's portfolio, maybe on this. Start small. Number 3, choose your AMC and the fund manager very, very carefully. Okay, look at all of this, about the pedigree, about their downside track record in the past. In SIFs and MFs, etc., how have they performed? Look at all of those in the past. Be completely clear about the strategy they're going to use. That's the AMC selection, which is important. Number 4, monitor the returns very, very, very carefully and closely. Even though we are telling investors, stay invested, monitor the returns. That is number 4. And number 5, patience. Okay, stay patient. Okay, ask your investors to stay patient, at least for some 3 years, 5 years, etc., to get the returns. This is not a buffet. Okay, this is not a buffet like mutual fund where everything is spread out and you can go and take, etc. This is like an a la carte French cuisine. Okay, where you should be able to understand the French cuisine to be able to convert them into connoisseurs of SIF. Okay, so all the 5 things that I spoke about, okay, please build awareness of the product, awareness of the patterns, awareness of whom to go, whom not to go, etc. Awareness of the strategy, be ready to educate so that you can become wealth architects in future, not just distributors, but wealth architects of SIF in future, and be part of the 5 lakh crore that I spoke about in the next 3 years. Thank you very much.